Hello, everyone. I am your accounts teacher Akanksha. Welcome to our lesson on partnership accounts. Today we will learn about the adjustment for outstanding expenses reduced in partnership accounts. This is part 14 of our series on adjustments, so if you haven't seen the previous lessons, you might want to go back and watch those as well. Please note that the adjustment will be done in a similar manner whether you are doing admission, retirement, death, or change in profit ratio question. You need not understand the adjustments separately for these chapters. Let's first understand the meaning of outstanding expenses. Outstanding expenses means expenses which have become due for payment but are not yet paid. These are also known as expenses payable. Let's see few examples on the next slide. Suppose in my firm I pay salary to all employees on the last date of the month. Every month I will pay salary, let's say on April 30th or September 30th or January 31st, etc. In the month of March the salary will be payable on March 31st. Suppose I do not pay salary on that date due to some reason, then it will be called outstanding salary till the date I will pay the salary. Similarly for other expenses also. Suppose due date for paying electricity bill every month is 25th. If I do not pay the bill till that date, then it will be called outstanding electricity expenses or electricity expenses payable. Any expenses which we pay in cash or bank and enter in profit and loss account debit side can become outstanding if it is not paid by its due date. But we list down few expenses which usually come in exams in outstanding expenses question on the next slide. The examples of expenses which usually comes in question as outstanding expenses are rent, interest, salary, electricity, repairs. Next, we come to how adjustment for outstanding expenses reduced is written in the question. Here are a few examples. First, outstanding rent to be brought down by 3,000 rupees. Second, outstanding repairs reduced by 3,000 rupees. Third, outstanding salary decreased by 3,000 rupees. Fourth, outstanding expenses of 3,000 rupees as per balance sheet will not be paid. Next we come to adjustment for outstanding expenses. Outstanding expense is a liability which is decreasing. Debit and credit rules for liability will apply. Since the liability of the firm is decreasing, so there will be revaluation gain. Next we come to journal entry. Outstanding expenses is a liability which is decreasing, so it gets debited. In case of decrease in liabilities we have a profit, so revaluation account gets credited. Next we will discuss how this will be shown in revaluation account. Since there is a profit, so it will be shown on credit side of revaluation account. Remember, in examination question replace the word expense by the type of expense like rent, salary, etc. as given in the question. There will be no impact in the partner's capital account due to this adjustment. Next we will discuss how this will be shown in balance sheet. In the balance sheet the value of liabilities will be decreased. In our example, on the liabilities side we will decrease outstanding expenses or expenses payable by 3,000 rupees. Remember, in examination question replace the word expense by the type of expense like rent, salary, etc. as given in the question. That's all for this adjustment. Thanks for watching. Stay tuned for explanation for more partnership accounts adjustments.